Good evening, everyone. I hope you all are having an amazing weekend. Let's start off here on our weekly preparation for trade ideas, charts, analysis, etc. for next week, so that we are prepared to what is to come. And with that, I don't want to waste much time here. And let's quickly get into it. We'll start off with our seasonality report, and then we'll talk about the macroeconomic calendar, and then the earnings calendar. We'll talk SPY, QQQ, IWM in general, and in a broad overview, and then I'll go with as many number of tickers as possible, while I also talk to you about some trade ideas and levels to look for as well. Before that, I did have a request on the Traders Lounge that you want to ask questions, you want it to be more interactive. I know there's a little bit of a delay when we are streaming. I think it's about a couple of minutes. So if you don't mind, if you have any questions, just post them out in our Traders Lounge. I will go over them once they, once I'm finished with the call. So I'll let you know, and we'll start off with that. Firstly, let's go into our economic calendar. Let's see this week. All right. First thing about the economic calendar, I repeat this every week. I do not want you to come up and say, okay, you know what, Katie said today has to be a red day on Dow, and it should be a red day. No, that is not how your seasonality reports are derived. These are just the probabilities of a particular day being red or green, and how many days that this particular day has been red or green in the past, barring or removing all the macroeconomic or external factors in the market that influence the market, right? So starting the week, I see that. So anyway, I also tend to take any number or probability which is greater than 60 a little bit more seriously, and less than 40. These are the two numbers I'm usually looking for, right? So after the second week of January, this is how it starts. I am seeing Nasdaq showing relative strength, and the strength growing through midweek. I think Thursday is where we are seeing 52, and then Friday we have a little bit of a weakness. See, like any number above 60 or below 40 is what I try to keep an eye out for. So Monday we are seeing Nasdaq at 67, which shows pretty good bullish strength in tech. S&P at 48, pretty flattish kind of a scenario there. Really don't know. The probability of it being up or down is 48%, which is almost close to a chance, right? Like flip a coin and say if it's going to be red or green. There's 48% with a little bit of a edge for the bears there. Dow seems to be red at 38. It's a very interesting fact here, under 40 on Dow as well. BA is going to open pretty weak tomorrow because of this FAA investigation into the 737 MAX, and BA influences Dow pretty big. So I mean, given that it's 38, I'm pretty. There's a 38% probability of Dow being green tomorrow. That is what that number signifies there as 38. So I think kind of seasonality kind of played out there. But anyway, I see that tech is going to be a little bit stronger. Tuesday, Wednesday, I see the same thing, 62 and 71. Wednesday especially looks pretty bullish. 67 and 71 on S&P and Nasdaq. Then you have Thursday, Nasdaq being at 52. It's a coin flip. Thursday and Friday, which is very interesting to me too, right? Like weekly seasonality, those Thursday and Friday just showing a little bit better than a little lower than chance there. We have CPI on Thursday pre-market and PPI on Friday pre-market. So those are going to influence the market pretty solidly. Whatever the numbers were, I wouldn't really take them seriously anyway. So that's what I'm looking at, the weekly seasonality. While we are at the weekly seasonality, I'll also tell you, start the week very, very small, very, very very light, because I think if market wants to drift higher, it just tickles tricks very, very small. I don't think premiums will move as good if you're playing options. If you're selling options, it's wonderful. Like we already sold options on Amazon, CSPs on Amazon. I'm looking for a couple more stocks there, where I probably can add them this year. I'll see. We'll I'll let you know whenever that happens, and we can probably play that. Whoever is willing to play that, we will play that. But when you're starting the year, you want to start it on a solid footing. Like, for example, last week, if you remember, we lost on Google, we lost on Coin, but we won on SPY, we won on a little bit of MSTR, we won a little bit on SMCI, this and that. But then and then the end of the week, we saw the opportunity on Nvidia. Look at how I kind of pounced on the opportunity, right? Like we started very, very, even on the small account, I got the Nvidia at 3.95, then got Nvidia at 3.8 on the small account, and then it dropped to 3.5. Added some more to 15K. All through the week, I was telling you, go small, go small, go small, go small. But then once we saw the opportunity, we were like, okay, time to pounce, and that's essentially what we kind of did. So this week also, start off small. Don't be that person who says, oh, you know what, I'm so enthusiastic, I will kill trading this year, and then you go in with 100K or what with a huge position that can blow your account out. Don't do that. Try to build the account first, and then try to make things happen. The other part is, I know a lot of you made a lot of good progress in 2023. Generally with new traders, this is what I always tell you: pay yourself, because after a big win usually comes a big loss, because you are so overconfident on it. Always respect the money you make, or take the money out of your risky assets, put them into assets that are less risky, probably buy Google stock, probably buy S&P 500, or I'm not saying just go buy it. I'm just telling you, or stay in cash, or put them into just buy treasury bills or something like that. Just don't throw away that money that you made, the hard-earned money that you made. Respect it, and pay yourself, and stay nimble, stay humble. That is how you kind of grow. So just wanted to emphasize that while talking about the seasonality as well, based off options flow. Next one, coming to our earnings calendar. Only ones that I am looking forward for this week are the bank earnings that come out on Friday morning. Pre-market, I'm looking at JPM, UNH. It doesn't trade as good on options, on the options side. If I do see something that stands out, I'll probably give a shout out. Bank of America and Wells Fargo, these are the ones that I'm looking for. While I'm looking for those stocks, I'm definitely interested in Goldman Sachs, which is not reporting this week, but then will move if JPM or other banks blow it out of the park. I think I saw a very good bet on JPM for 175 calls going to its earnings this week on 112 expiry. So I never generally play earnings. These whales got in at around 2.3. They're still in the position. I'll know that again in the morning tomorrow. I will keep track of that IV. I will keep track of the OI, open interest, and I'll let you know more. But if you like playing spreads, what I would do is buy 175 calls for next week, which is 119 expiry, and sell the once it's like 20-25% or something, sell this week's 175 calls in which the whales are in, because I think they are going to target it to around 175 to 176 ish if they are going to stay in that position all the way through, or if they are going to have a run up into this earnings to 175. I think you can get out before its earnings, or like you can minimize the risk of playing calendar spread. So that's the only trade idea I kind of have for earnings this week. But otherwise, Bank of America kind of has some good call flow. I see Citi for some reason has been having very, very good call flow for different strikes over different time frames. So keep an eye out for that as well. Wells Fargo, I didn't see anything that stands out, so that's mostly what I see right now on the earnings calendar front. Next one, coming out to the activity. Macroeconomic activity here. We have anything that really stands out. I would definitely look for CPI that's coming out on 111. I have done the analysis I kind of do every CPI print. I think CPI will be in line. We won't see any surprises to the upside. I believe we've been right for the past, I don't know, 6 or 7 CPI prints, right? So we'll see. Like I do think, I've been checking out quite a few metrics. Obviously, oil is one of them, and things like that. The ones that we as consumers can clearly see, but like there are certain minor or low weighted sectors that I don't really count or don't really take into consideration when I'm doing my analysis. But CPI should be in line this year. For December. So we'll see what happens there. 30-year bond auction, that's something you want to look out for again on Thursday, which comes up at 11 a.m. for me. So it's probably 1 p.m. Eastern time. So I'm sorry, I forgot there were times here. So 1 p.m. Eastern time on Thursday as well. That's something you want to look out for. You have China inflation rate that is also coming out on Thursday after the market close. So before Friday open. The problem with China inflation is the economy is getting deflated. That is what you don't want to see. You want to see a tick up in inflation in China. That is what will help China market or China stocks to move much higher. So as long as there is no inflation reading that goes a little bit more higher in China data, I don't think you will see any kind of a rebound in their market. Their economy is deflating. You do not want deflation. Disinflation is what the Fed is targeting. That is what is their mandate to soft landing. They don't want deflation. That is where deflation means you want prices to come down, right? So disinflation means you want price stability. That is where I keep telling everybody, like whoever comes up to me and says, "Oh, you know what? I'm going to wait for another 5 years for the housing market to crash or housing market to come down before I get in." 2020 is gone. Like inflation happened, everything, all prices rose up, and it's done. Right now, what is happening is the Fed is trying to control the prices going up by saying, okay, you know what, we are going to try to create price stability. That is essentially what they're trying to target. So that you don't want deflation. Once deflation starts, get out of the market. I'll say just stay in cash. Cash is king, and you do not want to stay in the market when deflation happens. And I hope it doesn't happen in USA. It can also kind of trigger recession in that process. So keep that in mind. Next one, you have PPI. PPI, CPI. I have seen counter trend moves. I have seen day twos from CPI to PPI. There are multiple things that kind of happen. First, let's see what CPI comes up with, and then we'll figure out what to do with PPI. But these are your main macro events you want to look for this week. Other than that, I mean the Fed speeches. Like I don't want to talk about who is bullish, who is bearish. That's whole 2022 and 2023. That has gone out the window, because now Fed has, like, I think the Fed is done, right? Like they don't want to hike anymore. All that the Fed is trying to say is, oh, we are going to be higher for longer. This, that, things like these are what they are trying to talk about. So we'll see. Like around these meetings or something like that, I'll try to guide you. I don't trade 0-day as much. I don't trade 0-day SPX or SPY as much, unless and until like I'm bored, or I'm like there's no positions that there are some positions that I need to cover or hedge. That's when I kind of work for it. But if you're working, if you have a day job, like if you can't sit in front of a computer like me, like a full-time trader, I wouldn't advise anybody to really go after 0-day. It's much easier to play weeklies or bi-weeklies and on individual stocks that are showing relative strength and relative weakness than doing 0 days. But anyway, this is what we have on the economic calendar front, and these are the important ones that you want to look for starting next week. Next, let me quickly go into the weekly chart on SPY, QQQ, and first, I'll start off with SPY. We'll talk about the weekly and the 65-minute chart where we track the gaps. Then we'll talk about QQQ and IWM on the daily, and just talk about some levels there. And after that, we'll talk about our core list of companies and other companies that we can look for this week. First one, again, I know I'll sound like a broken record here, but SPY. Healthy pullbacks, right? Like I don't think we are just going to go crater all the way down, or we are going to this is insane. To be honest, this is absolutely insane. Going almost 9 or 8 weeks. Yeah, I think 9 weeks, right? 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks straight going all the way up is something unheard. It is very, very rare that something like that happens. Usually happens to like around 4 to 5 weeks, and then we have a little bit of a pullback or a sideways action. But then that November to December rally is kind of crazy. But anyway, like a little bit of a pullback here in the market. But I'm kind of in the zone where I am inclined towards seeing all-time highs in January, and then we try to pull back all the way into March, and after that again we climb right back up into July, and then sell off until July and things like that, right? Like we kind of flag for about 6 to 8 months, and then we break out higher in the second half of the year to provide about to close S&P at about 8 to 10% for the year is what I'm thinking, which is very normal. That is essentially what most of these funds are trying to target as well. So I think that is what is going to happen this year. From what I see, we are not going to get a 23% rally like what we did last year. Last year was life-changing. I'm not even kidding about this. People just think, oh, you know what, this is a very normal year. 2023 was not a normal year. Not many people caught that rally as well, right? Like everybody was very hell bent on seeing this lower highs and lower lows, and we're basically in a denial all the way until we saw that higher highs and higher lows, right? But then October is when we saw that bullish divergence, right? Like here, I can pull up the RSI. You'll probably see it. But let me pull up the RSI. You can probably see it too right now. But once we saw that bullish divergence, you see this nice lower low on the price, and then you have a higher high on the RSI. This bullish divergence, this is a very, very key. This I saw this something like this in 2016, which acted as a very strong dip buying activity. So it occurred again in 2022. I was like, okay, you know what, this is this is absolutely going again. And that's essentially what happened here. And it was a great year, honestly. You do not usually get years like that, and that is where everybody's expectations, 2020 and 2021 and 2023 coming all the way in successions. I think people have their expectations out of the world right now. But I just feel we will have like a modest 8 to 10% this year. But overall, nice looking lower highs and lower lows in the market. Lower like this is another one. This consolidation here, which we broke out of. That's a lower high, lower low there. Again, we made a higher low. And then this is a higher high again, higher highs, higher lows. Nice little trend that is going on the higher time frame. So all the way, like if it kind of pulls back, I'm not really very concerned per se. But then I do want to tell you a few levels here so that we are ready if there is some kind of a bigger pullback here. So I would be looking for somewhere around 455 come on, sorry about that. Okay, there you go. Where's my, okay, let me just do option hedge. So I'm looking for somewhere around 455. So somewhere around 455 to 457. That's where there is quite a bit of support on the weekly time frame. And then I would be DCAing into SPY from 457 to 450. I don't see under 450 at the moment. Unless and until there's a black swan event and something just drastically breaks. I don't see anything that would affect the market right now. Anything that is under Fed's control. I think the market can bounce back on any pullback, right? Anything that is what is under Fed's control? The demand side of things is what Fed can control, right? And supply side of things is what is not under their control. So any shocks to the supply side with a black swan event there, I would be a little bit more cautious. But then anything towards the demand zone, I would not be that alert or whatever, right? Like this is what I told you last year in March also when SVB failed. Fed has your back. Don't have to worry about it because they have things under control. As long as they have things under control, they are fine. If there is something on the supply side that goes wrong, that is when things spiral down, right? So just something to keep in mind if you are looking for a 6 months to a couple of years out. That's the mindset that I'm always in. So so 457 to 450, that's where I would be adding in stocks that are relatively strong on a pullback, and that's what I'm looking for on the weekly time frame. Still very nice looking higher highs and higher lows, and this is still an uptrend. We are still in a bull market. So in a bull market, I don't think we will absolutely rage to like 500, 525 or so. We probably will hit 500 this year, but then we have to see how things go or how price acts in the first quarter of the year. I do think after this kind of a rally that we had last year, a nice flagging pattern, right? Like nice consolidation above 460 or 450 is something that I'm kind of expecting. Nice flagging, and then create a nice falling wedge setup and absolutely blast through the second half of the year. So we'll see what happens. I do think there will be a lot of rotation in the market while it's flagging, and that's how bull markets kind of work and keep the market pressed up. So you have to understand where the relative strength is, where the money is flowing. You have to stay in the sectors where the money is flowing. If it is not in a sector that you are generally acquainted with or familiar with, you don't want to stay in the market. You just sit out in the market and stay patient, and all of that will be tested this year again, right? So just understand that, and you'll be fine. So those are the levels that I'll be looking for on the weekly time frame for pullback, and that's where I will be looking for stocks that are relatively strong to add into my portfolio later this year. Quickly going into the 65-minute chart, this is where we track our bull gaps and bear gaps. We broke out of the horizontal, megaphone pattern, absolutely ravaged there. A little bit of a bearish divergence that I was talking about on last week. But then, looking at the chart right here, it looks like a falling wedge setup, and I kind of like this setup. Obviously, if it kind of breaks down, I'm not really interested in it. But a couple of things that I want to talk about here. There are two bear gaps that are open. So there is a little bit of an ammo that bears have created. So there is going to be resistance once these bear gaps get filled. So 470 is our first level that you want to look for early in the week. If we do see a peekaboo, right? Like, what is a peekaboo setup? Like, this is what I keep talking to you about quite a bit, where you have volume and a break above this trend line, break and close above this trend line. Once we see that, that is when we can probably this falling wedge setup. It basically targets for the fill of this bear gap too, right? So we will see what kind of happens there. But the setup is there, right? Like, this is a bullish setup that I'm looking for. Maybe CPI gives us that breakout that we are looking for. Maybe I don't know, but I'm waiting to see which side this wedge kind of breaks. But if this wedge breaks to the upside, I'm going to rip calls, and we will grow our account pretty well, right? So I'll be looking out for that on the 65-minute chart. Every bear gap that gets filled will act as resistance, so keep an eye out for that. I'll be giving you commentary, and I'll be sharing my screen just like always. You can watch it in the live trading channel, but looking pretty good. And if we kind of break down this wedge and break 465, I do think there's a very good chance that we see 460 this week, and this bull gap being filled as well. So like I was saying, on the weekly chart, 457 to 454 is where I would be targeting, or where I would be adding on to my long positions. You can also look left on the chart. You see how good that bulls have based, right? They have based for quite a long time, created that strong support zone or strong demand zone, let's say. I think that's the term that supply demand traders kind of use. They created a strong demand zone there, where if the price drops off, the fill of the bull gap will act as support. This 457 to 454 region will act as support because of that consolidation that happened there. So it is a dual support that comes in, and we can definitely see a bounce there, right? And then we'll probably look for bullish divergences and things like that, just like how we are looking for little clues that market is giving on this huge rip up, where we are seeing that bearish divergence. You can go back and look at the SPX commentary that I gave you on weekends. You can see last week I talked about this bearish divergence on the RSI. Just like that, if we do see some kind of a clue that market gives, that is going to help us to play the market in its tune and make some very, very good money. So, but next week, the levels that I'll be looking for: 465, 470, 474 to the upside. 465 breaks, 460 is the level that I'm looking for the downside. So 474 to 460, that is the range that I'm looking for here next week. I do think there will be one of these days where we see an 80 to 100 point move on S&P 500. I expected that on Friday, actually, when we dipped to 465. That's where I was calling out for calls and things like that, if you all remember, pre-market. But if we do see if I do see something very solid like that, we will play big again next time, and we'll probably make some very very good money. I'll let you know when I take it. I'll give you the position size and things like that. So keep an eye out for that. Next one is let's talk about QQQ. Oh man, 413 definitely acted as resistance. Above that is 415. I'll have to figure out once price breaks above 413. I'll have to figure out if 415 or 418 are the level, because I was taking some averages, and then once I take out the 15-minute, I was getting 418. So 415 or 418, I'll figure it out, but 413 is the target there. So anyway, on here, I do think we have a 393 as a strong support. Once we break 393, 388 comes. So 393 to 388, there is quite a bit of support that bulls have formed here. So I do expect a bounce about that level. So this week, anything to the downside, you want to see 393 break. Once 393 breaks, we will probably play the market to the downside. Anything to the upside, you want 400. I did see quite a bit of put selling on QQQ for 390 and 393. 390 and 385s for the next 2 weeks, especially into OPEX. Which is 119. So yeah, we'll see what happens there, but 400 is what you want to break above, and we can easily see 404 then on the same day for QQQ. So 400 to the upside with a target of 404 this week, and a 393 break for a target of 390 and 388 to the downside here on QQQ. If you want to play to the downside. So it's a waiting game. It is you'll have to see what happens. QQQ is probably a do not touch trade for me early in the week, at least. We are nowhere near the level. So QQQ is nothing that I would be looking out for to trade. Next one is IWM. We did see that retest of 193 as we have anticipated at 205, right? Like, this is a clean great drop. First things first, let me tell you, IWM, you want the TNX to be under 4. So once you see TNX under 4 is when IWM starts to rage back above 200. So right now, I think let me take a look at that. I did see that on Friday. I did see it above 4. Where's it? Yeah, it's at 4.053. So you want it under 4. Once it's under 4, I think IWM goes back above 200, and probably our targets to 210 to 220 are valid for the first half. First quarter, I have 210 as a target. For the first half of the year, I was looking at 215 to 220. So first quarter, first quarter to 210, I think is possible, and we want to hold on to. 193 has to hold on IWM. Otherwise, we have 190 also as a strong support. 190 and 193 both are pretty good supports. We are getting into a region of good supports for IWM. 187 is an absolute buy the day. Okay, so if we hit 187 on IWM, I'm going a week or a couple of weeks out, calls on IWM, and see what happens there here. So I do see 187. There is 193, 190, and 187. All the three have pretty good supports coming out. So I will be looking out for those three levels, see what happens there. I think it was last CPI or FOMC. I forget. We swung IWM. We took a pretty big position. We swung it for a 7x or an 8x trade, right? So if I do see something on IWM again, just like how I did last time, we see the flow, we see positioning of these big traders. If we see something like that, we'll probably get into it. But otherwise, I will be looking out for 187 on the dip. and anything to the upside, you need 196.50 to be broken. 196.50 and 199, 199 200 that's a psych level that you want to look for. But anything, you want 193 to hold, basically. That's the essence of IWM here. If we don't hold 193, we see 190 and 187. There's quite a bit of buy the dip activity that can happen at 190 and 187. Probably we'll play some shares then at that point. We'll see what happens. But 193 is an important level this week. That's what I'll be looking out for. But something happened. Give me one moment. I think I lost power or something on my. Give me one moment. I'll be right back in about 2 to 3 minutes. All right, I think Alex kind of turned off my screen for some goddamn reason. Anyway, 193 is the level that I'm looking out for, and 196.50 to the upside and 190 to the downside. These are my two targets that I'm keeping an eye out for. So these are the three levels that you want to look for on IWM this week. Next one, let's quickly talk about different stocks, starting with our core list of companies. First one is Apple. Apple with a very nice clean pullback. I'm expecting 177. I think I'm quite happy that I'm actually getting it in the first week of January. So I'm going to probably sell some 170 puts, CSPs on Apple. For its earnings. I don't see Apple going under 170 right now. Obviously, my target for Apple was somewhere between 170 to 165, but that's a very quick drop. And at 177, I'll be selling some CSPs on Apple. That's something that I'm looking for. 180 has to break to move lower. 180 is the level that I'll be looking out for early in the week. If 180 breaks, 175 puts can work per se early in the week. But anything after Wednesday, you probably have to go closer to at the money. So that's 180 is the level that I'm looking out for, with the 177 as target, and that's where I'll be selling some CSPs. If 183 breaks, we have 187. And Apple, about some news that I was reading over the weekend, I did see that their Vision Pro is going to be shipped on January 27th. That's an event, and usually Apple runs into its events and after that sells off. So pretty nasty volume too on the breakdown, if you see. So CSPs is where I'll be going for with Apple. That's my trade. I don't have any trade idea yet for playing the upside or downside, and these are the levels that I'll be looking out for: 177, 180, and 183. If we do break above 183, I'll probably look for some 185 calls or so, because 187 will be the target at that point. But if I don't have anything to the downside, I'll probably sell some CSPs here. Again, Adobe is another one that I really like to sell some CSPs on, cash secured puts. See, again, I don't have anything solid to say, go play calls here, because, market has been in a downtrend. So this is when I take advantage of the volatility and sell some premiums. when the market is trying to go back higher is when I try to, if I get shares assigned, that's well and good. I'll try to play, I'll try to sell off my shares or sell covered calls then. But right now, as the market stands, I like to sell. I like to use this volatility in my favor to sell some puts or sell some. I wouldn't be selling calls per se, but sell some puts and probably add some shares at prices that I would love to add, right? So keep an eye out for that. Here we are testing that a long-term trend line. That's why I kind of like it. At around 550-ish, I'll probably sell a couple weeks out 530 puts, and I'll play it. So here, right now, as things stand, three levels that you want to look for on Adobe. One is 570 to the upside. You need 570 to break to see 583, 600 again. But if we do see 562 break, there is a quick down move to 540. So I don't think 530 will break. That's why I kind of have 530 CSPs in my watch list, because if you look to the left, right, like you see that consolidation zone, and then you have this rising trend line support that's coming in through as well. So that is why I'm selling those 530 CSPs for the next couple of weeks out. And if you can sell them at around 550s, you kind of get like around $5 or $6 per contract, just like SMCI that we sold yesterday, right? Sorry, not yesterday, day before yesterday, no, on Thursday. But you get $500 a contract, and if you can if you can do it for every couple of weeks, it's about $5,000. Like if you sell 10 contracts, 1,000 shares, sell 10 contracts, is about $5,000 that you keep getting as passive income every couple of weeks, which is pretty good. So that's mostly about Adobe here. I kind of like this stock and the company, because this is one of the very few companies out there that's actually monetized AI, other than Microsoft, right? So I like the company. We'll see what happens here. It's back at the trend line where I like. If 562 kind of breaks, 540 comes very, 553, 540 kind of comes fast, I feel. So that is around where I'll probably sell some CSPs on it. Next one is AMD. We did see that bearish divergence on AMD, and then it dropped. If you can go back onto our previous call, you can see where we were talking about probably seeing 140s and 145 position, like the whales in 145 on 150 calls are still in position, but then they got absolutely wrecked. I think they bailed on this gap down here on Tuesday. So not much damage to them, but then I really expected 140 to hold on AMD. It did not. We dipped all the way to 134. When it dipped to 134, I thought 125 was coming in, and then you see that retest of 140. We'll see what happens here on AMD. We need a day close above 140 on AMD. Unless and until, what was that bearish divergence that I saw? This is the bearish divergence that I saw on AMD, and now the RSI is trying to climb right back up. So unless and until this bearish divergence kind of gets invalidated, right? Like you want a peak above this this divergence here, and the price going right back up here to 150s, 148. That's when you tend to get invalidation of this. Until then, you kind of get to a point where AMD will flag, and it will not have as much momentum as you have expected it to have during the break of all of this, right? Like during the break of all of this, if you all remember, we played some swings here, and then we got out somewhere around here. And after that, there was no stopping AMD. So anyway, and then we kind of played after that Lisa Su's launch party that she had. I mean, the event that she had, and after that, it was just nonstop. So unless and until that is invalidated or so, I do see AMD kind of flagging around here, not having as much momentum. Probably it'll lag, and Nvidia takes over from here, where Nvidia has been flagging for some time, right? So keep an eye out for that on the RSI. We'll see what happens here, but you need a day where AMD breaks above 140 and closes above to see 145 and 148 again. But otherwise, I'm not quite interested in AMD at this point because of that bearish divergence that I'm seeing right there. Next one, Amazon. This has an inside day on Friday. Very interesting there after the gap down. Yeah, it's at a zone where, like, I if you all remember, I sold 140 CSPs on Amazon. If 140 breaks, 144 breaks, we will definitely see 140, and I'm happy to add Amazon anywhere between 140 to 148 into my long-term port. So I'm really not very concerned about it. We sold our CSPs at around 144, so it kind of bounced, and then it was not able to break above 147. If it can break 147 though, we will see 150, 154 again. And my target for Amazon this year is 175 to 200. I will know better after the first quarter earnings, after the quarterly earnings, and we can go from there. But 175 to 200 is what I'm kind of targeting on Amazon. That's why I haven't sold any covered calls on Amazon last year. I'm still holding all the shares from 95. So this is a stock that I think is what will pay for me for 2 years, right? Like if you put in $1 million, you can probably make $500,000 each year just by selling it long term after a couple of years of hold. So that's what I'm looking for on Amazon. Looking pretty good. BA, I think I shared a trade idea. I think we will start the day under 238. This is where the consolidation was. 238 to 234 is where I think we will start under, and we will drop to 227 to 220 is what I'm kind of expecting. We'll see what happens there, but usually starts off the day with about 5 to 7% down, bounces a little bit, about 2 to 3% recovery, but then it will definitely have a day two of doomsday scenario, and we will probably see around 214 to 210 on the week for BA. It's absolutely terrible. The news is absolutely terrible, and I wouldn't even be surprised to see a BA under 204 per se. So keep an eye out for that on BA. All right, next one. Let's talk about Google. This was one of our losing trades last week. I shared the recap as to why I took it, what I have learned from that loss. I hope everybody's is read it and is helpful for next time we take a trade very similar to this. I did expect a bounce off this trend line, but then it never really happened, so which is fine. Like this is a look above and fail kind of scenario. I think we are targeting 134ish to hit the lower end of the trend line, and then we'll have to reassess as to what will happen. Google, if it drops to 134, I'm definitely selling some CSPs for 130 or 130 or 125s going to earnings, and also I'll sell covered calls for 140. So that way, we own a lot of shares from 121. If it does fall, we'll average up that, which is fine. I'm fine holding Google until 170 to 180. That's my target. So if it does fall, we'll be assigned with shares. We'll be averaging up, and even if we average up, we are going to eat up a lot of premium on the call side. So it's going to be a win-win situation for us. We'll see what I'll give you the trade idea once we see what's happening there. So that's mostly what I'll be looking out for on Google. So next one, let's go with Meta. Meta, I'm bearish into its earnings. Let's see if we can hit 360 into its earnings, run up into its earnings, and then we can drop pretty hard. It'll be interesting once we do that. So keep an eye out for that on Meta. Next one is Microsoft consolidating. 385 is the target for earnings run up, is what I'm thinking. The whales are still in the position for the earnings run up play for 385. So keep an eye out for that target on Microsoft. If we can break out of this wedge, I think 400 is possible on Microsoft, but we'll see what happens there. So that is essentially what I'm looking for on Microsoft. MSTR had a very big call flow after the shooting star candle. We are consolidating about 600, 620. A big call flow for 700 calls for 119, over $1 million bet for the Bitcoin ETF. Approval, I think. So we'll keep an eye out for that on MSTR. The premiums are around $22. If you are interested, that's some trade that's going on there. Next one is Netflix. Netflix has broke down unless and until we reclaim 480. There is no run up to 493. I do think Netflix will run up into its earnings and then drop. So keep an eye out for 480. Once it breaks, you can probably play the run up into its earnings here on Netflix. Next one, Nvidia consolidation, like I was saying on Friday, something very similar, right? Like it's been consolidating for quite some time. Nvidia, I think, can see 600s this year. Keep an eye out for that. 505 breaks, there's no stopping Nvidia here. So that's the level that I'm looking out for on Nvidia to swing calls. For day trading, this is a great opportunity. Like we saw that on Friday, we saw that on Thursday, pretty good, and we did close above 490, which is a significant advancement there. I do see 500 this week. If 505 breaks, 515 and 520 are very possible on Nvidia. Next one is SMCI. SMCI, huge consolidation again. Just like this one is a big player in IWM, right? So we'll see what happens here. 298 breaks and holds. We see 310, 321 and all-time highs after that. So this is a falling wedge breakout peekaboo setup on Thursday, which is pretty good. And after that, Thursday, the premiums didn't inflate as much, so I kind of got out of SMCI at the open. Not big gain, but then like after that I took all the money, put it into Nvidia, and Nvidia did pretty great. But if 298 broke, I would have probably swung some SMCI. So that's the level that I'm looking out for this week. Snow, I need 203 break. 193, yes, there's resistance again at 193, but 203 is the level for me to look for Snow to play. You see what happened at 203. Once 203 breaks, I think there's a bigger run here towards 240, 250 on Snow. So keep an eye out for that. 203 is the level you want to look for on Snow. Next one is Tesla. Again, going back to the weekly, trend line. This is the trend line. That is what you want to see on Tesla to break to see 200, 300 plus. So unless and until that happens, I am not going to touch Tesla. It is going to remain hectic like this. It is going to be choppy, and you will probably be burnt unless and until we see something on the 15 minute or on the 65 minute time frame. I'll probably give a shout out, but for a day trade. But swing trade, I really don't like Tesla here. Last but not the least, XOM is something that I was looking over the weekend as well, holding 102.30 pretty well, even after the bad news on Friday. If 102.30 breaks, we do see 100 again on XOM. But with the war in Middle East and like escalations that have been happening, I do think there's a chance that XOM sees 105 to 105 again. So the way to play this stock is usually you don't want to go after weeklies, because you never know when the stock kind of moves per se. Like there's heavier theta decay, and the beta move on the stock is pretty low. So you want to go a couple 2 to 3 weeks out, and the premiums move really well on those on those once the stock moves, because the IV is very low on the stock. So keep an eye out for that. 120 102.30 is the level that you want to hold over here. If you are in calls, that's your stop loss level as well. 105 is the target on XOM. that's mostly what I have. But yeah, I mean, I did share quite a few charts, quite a few ideas in our game plan channel as well. So keep an eye out for that. All right. Let's see. Oh, YouTube screen is stuck on IWM. Seeing IWM chart. Oh, uh, all right. I think. God, that is bad. Okay, I'm sorry, but I will try to rectify that. I don't know what happened to my screen in between. Nobody really touches Alexa in the house, but all right, I'll post these charts out with notes in our game plan channel, and you can go from there. But I hope you heard my voice at least, and that was helpful. Anyway, have a good weekend, and I will see you guys early in the morning with the pre-market notes. Let's kill it this week again, but always remember, start slow, build your account, and then you start to roll bigger. Don't be over enthusiastic. Don't be like, oh, I'm FOMOing around stocks that you never watched or you never had an idea about. It really doesn't matter. Market has a lot of opportunities that will help you, and um, just remember that. Have a good evening. Have a good rest of your weekend. Thanks.